All right, let's dive right in. Welcome to today's Explainer, where we're putting the spotlight on a truly fascinating corporate growth story extracted straight from the latest SEC filings. If you've been following the food manufacturing sector at all, you already know that scaling a brand in today's grocery environment is literally no small feat. It's incredibly tough. So today we're cracking open the first quarter fiscal 2027 earnings report from Mama's Creations to see exactly how they engineered what can really only be described as a total breakout quarter. For those of you who might be kind of new to the name, Mama's Creations is a leading national marketer and manufacturer of fresh deli-prepared foods. They were actually born from this really rich history in Italian foods, and now their products are sitting on the shelves of over 12,000 grocery, mass, club, and convenience stores nationwide. They are operating right in the absolute crosshairs of modern consumer demand, giving people exactly what they want: high quality, clean, and super easy to prepare deli solutions. And that brings us to the real headline news here. 50%. That is the massive year-over-year revenue growth the company just posted for its first quarter. We're talking total revenues hitting an impressive $52.8 million. Now, in the physical products world, adding that kind of top-line velocity in just a single quarter, that's a huge signal that a company's strategic gears are really starting to catch. So, how exactly did they pull this off? Here is our agenda for this explainer. 1. A breakout first quarter. 2. Beating the Costco hurdle. 3. Profits and margin pressures. 4. The catapult strategy. And 5. Recipe for the future. Section 1. A breakout first quarter. The headline numbers. Let's unpack these overall financial leaps. Now, you really have to look at the relationship between the top and bottom lines here. Revenues spiked from $35.3 million to $52.8 million. But pay close attention to the net income right there with it. It didn't just track alongside revenue, it actually outpaced it. Net income surged from $1.2 million to $2.1 million. That is a highly impressive 66% increase. What that tells us is that as the company pushes more volume through its systems, a noticeably larger percentage of those dollars is successfully making its way straight to the bottom line. And that operational success, it translates directly to the balance sheet. They ended the quarter with a growing cash position of $24.4 million, which is up from $20 million just a few months prior. The biggest thing you should take away from this is flexibility. With total debt standing at just $5.1 million, generating this kind of strong operating cash flow gives management a serious financial war chest. They have the flexibility to make strategic moves without relying heavily on outside capital. Section 2. Beating the Costco hurdle, the ultimate stress test. This is honestly perhaps the most compelling narrative challenge of this entire explainer. In the retail world, your past successes can sometimes be your biggest analytical enemies, simply because they create these massive comparative baselines. In the prior year quarter, Mama's Creations ran a huge, nearly $10 million digital Costco promotion, often known as an MVM. Usually, when a company laps a massive event like that, analysts expect a revenue dip because that promotional volume just disappears. But this year, as management explicitly notes in the filings, they actually grew right on top of that comparison, and they did it with meaningfully less trade investment. They basically took a massive promotional spike and replaced it with broader, organic, and far more durable demand across their legacy customer base. And that perfectly illustrates this 1-2 punch. They didn't just survive lapping a $10 million Costco promotion, they drove right past it to hit that $52.8 million mark. This absolutely proves that the underlying brand strength and product demand are holding up naturally. They don't need to just buy the volume through heavy promotional discounting anymore. Section 3. Profits and margin pressures, the cost of scaling. Now, a true, honest explainer requires us to look impartially at the friction points, too. And for Mama's Creations, that friction showed up in the gross margin, which dropped from 26.1% down to 23.6%. So, what exactly caused this 250 basis point dip? Well, the filings point directly to the cost of scaling. They ran into some short-term labor and raw material inefficiencies. But here's the absolutely critical context. These weren't just random, careless errors. They were directly tied to the startup of new packaging technologies and new protein form factors, All of this was required to launch over a dozen new items with major retailers. Management explicitly views these as short-term investments. As these new items inevitably transition from their messy launch phase into a smooth, steady-state production, the company is remaining firmly confident that they'll reach their stated mid to high 20% corporate gross margin target. Now, to fully grasp the impact of those margin pressures, we really need to look at EBITDA. Before we hit the actual number, let's just demystify this term real quick. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's basically a standard corporate metric used to strip away all those complex accounting decisions so we can look at the raw underlying cash-generating power of a company's core operations. So, here is the absolute kicker. Despite the drop in gross margin percentage we literally just talked about, Adjusted EBITDA actually grew by a massive 71% to $4.9 million. No joke, this right here is the ultimate proof of operating leverage. Even though it cost them a little bit more to actually make the products during this high-growth launch phase, the sheer volume of products moving through their integrated network meant the actual operating profit dollars absolutely skyrocketed. Section 4. The Catapult Strategy, Engineering the Breakout. Let's look at the actual boots-on-the-ground operational playbook that made this breakout quarter possible. CEO Adam L. Michaels refers to this specific quarter as the catapult portion of their broader 4Cs strategy, which was on full display here. It's an aggressive phase, focused entirely on accelerating breakout growth. It relies heavily on rapid product innovation, fully utilizing an integrated manufacturing network, and significantly deepening partnerships with the absolute largest grocers in the country. And here is how that catapult strategy actually landed in the grocery aisles. During this single quarter, they launched over a dozen new branded SKUs. We are talking about massive, high-volume retail wins across absolute giants like Walmart, Target, and Food Lion. And they were only able to fulfill these huge orders because they successfully executed on their integrated 3-facility manufacturing network. That network now includes the new volume and the successful integration of their recent Bayshore acquisition. Let's peek at the balance sheet for just a second to see how they actually manage this behind the scenes. Usually, supporting massive new rollouts at places like Target and Walmart completely drains your cash because you have to build up huge piles of inventory up front. And, well, unless you were hoarding toilet paper back in 2020, sitting on massive inventory usually drains your cash pretty fast. But their data shows incredibly strong working capital optimization. While their raw materials naturally went up from $3.3 million to $4.7 million to support all this production, their finished goods inventory actually decreased from $5.1 million down to $3.3 million. They are turning over their finished products incredibly efficiently, getting them off the floor and straight out to customers, which is exactly why that cash balance we talked about grew so much. Section 5. Recipe for the Future, Sustaining the Momentum. Bringing all these numbers together, what exactly do the filings indicate for the company's path forward? Well, the immediate recipe for the future is all about stabilization and strategic expansion. Number 1, they've got to move those dozen-plus new items out from the chaotic launch phase and into highly efficient steady-state production. If they do that, number 2 naturally follows, returning to those mid to high 20% gross margins, and as they continue generating this strong cash flow, management explicitly notes in the filings that they intend to use their fortified balance sheet to pursue accretive M&A opportunities, meaning they are actively looking to go out and buy other companies to add to their growing platform. This entire problem and solution narrative is pretty perfectly summarized by CEO Adam L. Michaels himself, who stated, and I quote, "The combination of strong organic growth, new volume from the Bayshore acquisition, expanding and deepening retail distribution, a fortified balance sheet, and a well-defined blueprint gives us confidence in our ability to deliver sustained, profitable growth and long-term value for our shareholders." Which leaves us with one ultimate question as we wrap up today's explainer. Can Mama's Creations maintain this massive breakout momentum? They've successfully launched the catapult strategy, they've secured prime shelf space at the biggest retailers in the country, and they've definitively proved their operating leverage. Now the real true test will be executing that steady-state production in the quarters to come. It's a completely fascinating financial narrative and certainly one worth keeping an eye on. Thanks so much for joining me on this deep dive into the numbers.